Good afternoon. I'm Katie Gilligan. Let's just give it a few more minutes for some of our attendees to log on. We'll start in a minute.
Maybe I'll start it on my phone until that gets worked out.
Why did we're having so many issues with that? Because we should be able to at least do it on there. But like Zoom is weird for us.
All right, let's get going. We'll start the webinar. Welcome everyone. Good afternoon, and thank you for joining Saul Ewing Arnstein and Lear's webinar, Creativity and Innovation in the Industrial Warehouse Market. How changes in industrial warehouse design, operation, and development will affect this sector in 2021. If you have your phone on, if you wouldn't mind muting your phone,
number that I could dial in.
that would be great. Pick it up where I left off. Today's webinar will focus on innovations and market changes in the industrial warehouse space. Our panel of experts will discuss ways in which creative design, visionary development, pandemic pivots, and innovative use of technology have evolved to meet supply chain needs and users' demands. My name is Katie Gilligan, as I said earlier, and I practice in Saul Ewing's Chicago office. I'm a vice chair of the real estate group, and I'm experienced in acquisition, development, leasing, and disposition of commercial real estate, with an emphasis on representing industrial, corporate, and institutional clients. I'm joined today and pleased to have my partner, Howard Majev, from our Baltimore office. Howard's a seasoned real estate attorney with extensive experience in acquisitions, dispositions, financings, development, and leasing of industrial, multifamily, retail, office, mixed use, and even sports properties, including stadiums. Howard and I will be your moderators for today's webinar. So before we launch off into this, I just have to have a couple of housekeeping matters. The first, questions and answers. The questions can be submitted through the Q&A tool at the bottom of your screen. We will do our best to answer the questions you submit, but if we run out of time, we will get back to you individually via email post-webinar. Number two, and as lawyers, we have to say these things. The provision and receipt of the information in this presentation is not legal advice, and it doesn't create a lawyer-client relationship. And it should not be acted upon without seeking professional counsel who have been informed of your specific facts. So with all of that to the side now, let's get going. I'm going to turn it over to Howard, and he's going to introduce the first of our three panelists. Howard?
Oh, Howard's muted.
Howard, you're muted.
You missed your introduction, Beau.
All right, let's do it again.
In any event, it's my pleasure to introduce the first of our three panelists, Beau Farkas, who is a client and a longtime friend. Beau is the founder and the principal of Arbach Partners based in New Jersey. Beau and his team oversee acquisition and development opportunities in New Jersey, in New York, and in the Northeast, with a heavy emphasis in industrial space. Beau brings to the table over 20 years of construction, engineering, and investment experience in connection with industrial and warehouse properties. And if you ever work with Beau, you are struck very quickly by the fact that his solutions are thoughtful and creative and eminently practical. I'm thrilled that he could join us today, and I think he'll have a lot of wisdom to share with all of us in the next hour or so.
Thank you.
Beau, do you want to say a few things about your?
I'll say a minute or so, but yeah, we're in the Northeast, based in New Jersey. We focus all on industrial, but in the last 3 to 4 years, we've developed and entitled over 3 million square feet just in New Jersey, and in the next about 2 to 3 years, we're going to do probably 4+ million square feet in New Jersey. So we're pretty excited. Obviously, we're going long on industrial, but we'll get into the nitty gritty of the industrial as we get the webinar going.
Thanks, Beau. I'm going to introduce the next of our three panelists, Mark Shearer. Mark is a Senior Vice President and Regional Development Officer in the New Jersey, Pennsylvania Development Group for Rockefeller Group. Mark's a 30-year veteran of the commercial real estate industry, and he's based in Rockefeller Group's Morristown, New Jersey office. He leads all New Jersey and Pennsylvania development operations for the company and has a wealth of things to share with us today. So Mark, take it away.
Thanks, Katie. I'm Mark Shearer with the Rockefeller Group, and it is the Rockefeller Group that was founded to develop Rockefeller Center in 1928. So we have a long New York lineage and have used that position and that leverage to really develop in multiple states. We're in California, Georgia, South Carolina, Florida. We have an office in DC, and obviously New York, New Jersey, and PA. We are not wed to just industrial. We're also doing multi-story condominium projects in Manhattan and in Atlanta right now. In New Jersey, our focus has really been industrial. I'll kind of loop onto what Beau just said. The market has been incredible. We have 2.5 million feet under development right now that's active construction, and really are going long as well. We're Beau and I kind of see each other competing for sites on a pretty routine basis. Thanks.
Thanks, Mark. Howard, do you want to make the next introduction?
Sure. Our last but not least, our third panelist is Hugh Williams, who is the principal and the managing broker with MK Asset Brokerage and has been in that role since 2019. Before joining MK, Hugh established Avison Young's Chicago office, which was the company's first beachhead and expansion outside of Canada, and its inaugural US location. Hugh brings to the table a broad experience in commercial real estate. His expertise includes build-to-suit transactions, headquarter relocations. He's involved in numerous investment sales and provides a full array of corporate services. We're thrilled to have Hugh be a part of our discussion and panel today.
Oh, great. Thanks so much for the introduction, Howard. Good. And Katie, I know that I had some technical difficulties, but can you see me now and hear me?
I can see you perfectly.
Okay, fantastic. So thanks so much. My name is Hugh Williams, and unlike Mark and Beau, my perspective, is a little bit different. I'm primarily a broker on the industrial side. However, my firm is diverse. We've got an eclectic portfolio of assets, multifamily, office, industrial between Atlanta and Chicago. So, each deal that Mark and Beau do, they're probably individually bigger than my firm alone, but we've got a diverse set of pursuits. And, my hope here is to share what we do on the brokerage side and provide some thoughts on what we see in some other markets outside of Chicago.
Thanks, Hugh. That's great. I mean, we need all the perspectives from all three of you because you're all seeing different things in different markets. Your focus is maybe sometimes aligned and sometimes not at all. So with those introductions, I'd like to kick it off. And I've got the first question. So I'm going to start with you, Mark. Tell me, how has the pandemic changed your business model or the fundamentals in your market? I mean, are these temporary, long-term? I think the pandemic has been a big story of 2020. It's going to be a big story of 2021. What have you seen and where do you think it's going?
What we've seen is really an acceleration of trends that we saw before the pandemic. E-commerce is clearly taken hold. Everybody gets, their daily shipment from Amazon. And I think, one of the stats we've seen recently in New Jersey is, Amazon accounted for 36% of the leasing volume in the market in the second half of last year. So we've seen that accelerate. I mean, all of that had been acted before. I think our model and our long view is exactly the same as it was pre-COVID. I think we've accelerated a few things, trying to push entitlements. What has changed is, there's additional capital flowing into this sector, and it's really driven up pricing, both land and I think now we're actually starting to see it in the construction pricing side as well. I just got a notice that steel pricing is going up, and that just panned out on a project we just got bids for, over the last week. So, overall, I don't think it's changed a lot, but what it has done is it's really just accelerated the trends that we'd seen before.
So when you're talking about entitlements, the process is different?
The process is the same, but the process is different in that, just like this seminar, we're doing it over Zoom. We're doing, hybrid meetings. There's meetings that are still in person. There's meetings that are 100% virtual. So I think we've all had to adapt our styles and our presentation styles to work, with the new technology. And, New Jersey's a home rule state, so I think there's 500 municipalities. So, there's probably 500 different ways of doing this. And I think that's what we've been kind of dealing with.
And that makes it easy, right?
Yeah.
Right.
I was just going to add, Katie and Mark, that the positive aspect, at least in New Jersey, has been, I'm sure in some of the states it's similar. The local governments actually stepped up very quickly and well with the online planning board meetings and whatever the meetings that were required to get things approved. And then really, as you kind of went higher on the state level, because there are no planning board meetings or public meetings, it was a little more herky-jerky. But at least for me, we were very pleased with the local governments stepping up. Very efficient.
But Beau, are you starting to see changes in design because of the pandemic, or maybe worrying about pandemics of the future in terms of air filtration systems and other things that maybe weren't so prevalent as a design issue 5 years ago?
There's definitely a trend towards that. I mean, just like Mark was saying, I mean, there was a trend more so about saving energy and sustainability and adding. I mean, the big thing now is adding, well, besides the solar and those kinds of sustainable items, it's adding truck for industrial truck charging areas or stations and those kinds of sustainable items. Obviously, lighting and all those other things have been on the trend already.
Right.
And
Which is,
Hugh, I was going to ask you, on the broker side, what are you seeing? Are there things that you're seeing are being used now to augment virtual reality? So tours they've always been done, I guess, more or less
Sure.
Virtually, but what else are you seeing?
well, we just completed, well, not completed, but agreed to terms in Savannah, Georgia on 300,000 square feet, and about the same in Salt Lake City. And both of those deals were completed in the midst of COVID. And what I can tell you is that the decision tree, at least from our clients, was a little bit more compressed from a time standpoint, right? They got to a decision quicker, but generally speaking, from a process standpoint, things worked relatively the same. And we want to touch on when Beau talked about local governments on at a higher level on a state level. Both the deals that we did received some significant incentive packages, and those actually went incredibly smoothly. Probably, my guess is maybe faster than in a normal period of time, and I can't explain as to why, but in particular with Savannah and competing with South Carolina, maybe it's because they're so used to it, but that was an incredibly smooth process, and so maybe there's some efficiencies that way. But with regards to the trucks and the charging stations, from an EV perspective, I do see that as probably the biggest change. When it used to be a lot of talk in the industrial space about LEED certification and things like that, but a lot of companies don't make decisions based on LEED but we'll think about some of the new things coming down the road. So.
Well, you hear with the pandemic that there were safety concerns that landlords had and new construction could accommodate. And whether they were coming anyway, and as Mark said, the pandemic has accelerated some of these improvements. Are you seeing people do things like install self-troubleshooting HVAC systems, so in order to avoid having to bring in third-party servicers? Or are you seeing people putting in, as Howard was mentioning, these augmented air handler facilities, or conducting virtual tours in these mock-ups using either augmented reality or virtual reality to put people in this space without actually putting them in the space? Is that coming into the markets you're seeing yet?
I would say on the augmented reality, the virtual reality from just a physical inspection standpoint is coming. Both of our clients on the distribution side didn't make a huge issue with regards to future safety from a standpoint of, what can we do to protect people going forward? But what I can say is that they're in the process of evaluating how they approach safety, but I don't think they know how they want to go. They want to proceed going into the future.
Yeah, that makes sense to me. I think, Mark, you had mentioned one time that sort of bigger tenants are going to command bigger investments in bigger, shinier, newer things. Did you want to make a statement about that?
I mean, we've seen a real move, especially with your companies that have, strong balance sheets, to HVACing the entire facility, which has necessitated, additional roof loads, additional power. That actually incorporates a lot of the, automated HVAC monitoring systems, et cetera. That all kind of comes as a package. And I think that's here to stay. I mean, what we're seeing is a lot higher employee count in these buildings than we ever saw before. So that's necessitating bigger parking lots, bigger secure entry areas so that the employees can actually get into work and get screened. Going into one of these buildings is a lot harder than getting into the Capitol. So it's just the way it works. So I think we've seen that, and I think we will continue to see that as we go forward.
And let me pivot just a little bit. Tell me about solar. Are you seeing a lot of users asking for that, building owners wanting that?
The projects we've worked on, we're building the solar capacity into the building so that you can put it on the roof. We're basically a merchant developer, so we're going to get in and we're going to get out of these projects. But we are seeing it installed on a couple buildings that we have delivered. It is something that the end users are taking into account. I mean, Amazon obviously is trying to go to a carbon neutral footprint. And I think that, coupled with EV charging stations in the parking lots, et cetera, is, they're the trendsetter. And I think you're going to see everybody else follow.
And Mark, I was just going to add to that a lot more of these buildings are getting highly automated. So it makes sense, because we do the same thing where we design in the solar loads for the structure, but it makes sense nowadays for a lot of the tenants to start using solar or renewable energy, because the amount of power that these buildings require, for example, like a 1 million square footer these days will get up to 6,000 to 8,000 amps of power that it requires. And back in the day, let's say 10, 15 years ago, that was probably closer to 3,000 amps, maybe 3 to 4.
4 was a lot.
Yeah. So
and Beau, just to piggyback a little bit on what Beau said about automation, and Katie represents this particular client that we work with, but we work with one of the top alcohol distributors in the country, top 5 distributor, and this is an industry that maybe you would or wouldn't think if there'd be heavy automation, but the next building that we're looking at would probably be close to 400,000 square feet, north of between 40 and 50 clear, and potentially fully automated. And that's alcohol distribution, right? Which is, I think when people think of that, it's a pretty people intensive, at least from a warehouse standpoint, and some other things, certainly from a distribution standpoint. But automation is coming, I think, and it's coming in industries that we don't necessarily think, that we just haven't thought of as, we all know that Amazon is highly automated, right? But no one thinks about beer and liquor in that respect yet.
But the other thing that's helped, I think, is data collection. So how to collect data, whether it's how many times the door goes up and down, or how your HVAC system works. Everything's connected Wi-Fi these days. So that data collection has helped a lot in how it's basically it's automated. Because beforehand, I know when I came out into the construction industry, like in '99, everything was entered by hand. And I would say even nowadays, in some property management companies still have to enter a lot of things by hand. And it's not that fun. It's not that fun to do. So, and it doesn't really, it's not to the person entering that data, if you do it manually, it has zero value to that person. All it does is it just takes away from their job satisfaction. But senior management, whether it's at property management or companies or real estate companies or beer distributing companies, they want to see the data and they want to be able to make better decisions. But it seems crazy to belabor your employees, where they could use their cognitive abilities to solve higher level problems, to be just data entry individuals. So now with technology, a lot of this is able to be done.
And I've also understood that a lot of landlords like these smart buildings, because not only do they manage utilities and operational expenses, but in a really Machiavellian way, to your point about how many times the dock door opens and closes, you kind of get a sense of how busy your client is, or your tenant is, I should say, and how business is going. If you're a shipper and your dock door is only going up once every 4 days, that's not really a good thing necessarily. And it gives the landlord a lot more information in terms of not just how, can we be more efficient in the HVAC system?
Right. Yeah. Well, no, you said it, because we've had, I remember Mark and I did a build to suit. This was a while back. It was for a tire attendant, but they were moving into the building in January. It was about 350,000 square feet. They were taking half of this building. And of course, we had to do all the TIs during the winter, and the amount of energy we've spent, meaning the energy bills were, I think it was like several $100,000. And if you could figure out how to correlate your doors and your construction and all this stuff to make the building more efficient, not only is it better for your bottom line, but it's also good for the environment. So it's a symbiotic thing.
Absolutely. And speaking of doing deals in winters, are you thinking there are any new target markets out there that 2021 is going to bring about? If you read some of the, I don't know, the publications, some folks are suggesting that because the residential population all migrated from the cities, we're going to need more distribution centers out in the burbs. What do you think about that?
Well, from a distribution center standpoint, I think the number one thing that's most important to people is access to certain population nodes, right? So there's always, and there's still going to be a continued interest in the last mile type of, that new terminology, relatively new terminology. Most of the big box DCs are in ex-urban areas anyway to begin with, and sort of work their way inward from that. But what I can say is this, based on when we did 225,000 square feet in Riverside, California, which has a 1 or 2% vacancy rate, technically sort of a port-related market. We went to Savannah, and we're representing a group that's looking at looking at acquiring a site to develop And we toured the market in November, and 3 of those sites have gone under contract since then, since November, right? So I think that there's pressure on the port markets, and everyone's fancy is to be as close as possible to the population nodes. And then depending on when the new supply chain person gets fired, then they change the model a little bit as it goes to big box DC. At least that's what I think.
Yeah. Well, yeah, I mean, we're seeing, listen, there's a lot of retail centers out there. It's un-American not to be consuming, right? So there's a lot of malls and all those things. And we're definitely working on repositioning some retail properties. And so there is going to be a lot of demand still for warehouse space, but I also see with the big mall owners, whether it's Simon or Brookfield or some of these other guys, they're not going to sit by and have someone else eat their lunch, and they're very well capitalized, intelligent individuals. So they are going to figure out how to reposition their own malls. So yeah, that's also sort of headwinds, not in the sense of headwinds against industrial. It's not all new warehouses. It's also repositioning existing buildings.
There's also the issue of availability of sites. And I understand there's lots of buildable land still in Indiana, but however, on the East Coast and on the West Coast, availability of sites is an issue. Are we going to start seeing maybe some tear downs of existing warehouse sites to replace them with, buildings with 40-foot clears that are automated and smart? There was a couple of years ago, there's a lot of interest in vertical warehouses, and that had, maybe except for New York, that really hasn't caught on in the United States. But do you guys see that we will see some changes in the way people find land for an expansion of warehouses?
We're already seeing that, in the northern part of New Jersey. I don't think there is a vacant site that didn't have something on it. I mean, everything that we do is almost all some type of redevelopment. A lot of it's been old, contaminated industrial, foundries, chemical facilities, research facilities. So I think that trend will continue. I think we went for a long time where industrial rents were so low that you really couldn't garner a profit by redeveloping a lot of these sites. The cleanup costs, the complexity of it really didn't make it pan out. And I'll give props to Beau. I think he found the first site that was actually on fire and put the fire out over top of it. And I think that's what you're going to see in the closer, denser, urban centers. And I think as you get further out, one of the tricks with redeveloping retail is it just depends on your jurisdiction and where you are. If you're in an area that's, has an active population base, they tend not to like trucks, whether they want to like them or not. They don't like them. And a lot of these municipalities garner a lot of their tax revenue through sales tax. And the whole taxing of the stuff that's sold through the internet or that goes to a warehouse at that local level, the states kind of need to figure that out to kind of pave the way for some of that stuff.
Right. Yeah. It just to give some statistics in terms of percentage of sales. I forget where I read this, but it was I want to say a couple of years ago, it was 11% of retail sales were online. I think last year that doubled to about 22% or so. And it's going to maybe not double, let's say this year, but it'll get into the 30s most likely. So, is it a bubble? Is it not? It's a shifting. It's almost like an arbitrage. If New York City is, I'll use New York City as an example because it's such an extreme, right? So you'll have retail rents in the $100+ square foot range, right? And then industrial rents, and again, there wasn't really new product, but we're pretty much in the teens to low 20s. So if you really look at the arbitrage on that, where your retail rents are in the hundreds, and then now your industrial rent is, let's say, $20, there's a lot of room to run, right? Where there's a lot of shifting from in-store brick retail to online retail. So the rents, so obviously retail rents will come down, industrial rents will go up, but where does that sort of fall out? Because as a store, you have to, you're really open and you make sales while people can actually go into store, let's say after work, during lunchtime. And then once dinner time comes around, people don't go to the stores. Online sales, not that I was doing it, but I could literally go online right now and I could buy something while I'm talking to you.
Absolutely. Absolutely. And I think sort of to pivot away from the pure industrial conversation, you can't ignore retail in the sense that a lot of the industrial warehouses are serving retail customers and consumers. One of the questions we've received from our participants asks about the thoughts of future traditional retail, and do you see retail centers pivoting? I think we sort of talked about that a little bit, but do you have any perspective on what landlords are doing to backfill those spaces?
So I'll Mark and Hugh, I guess I'll just start off in one way. I mean, we've looked at a lot of different malls in retail spaces. The hardest thing, again, we don't do retail ourselves, but the hardest thing is you have a lot of tenants, and then they're not all coterminous, and then you'll always have, at least in a large mall, you'll always have one tenant who's got a really long lease and they have great credit and they're doing well. Meanwhile, the rest of the mall is failing. And then what do you do? Like, how do you buy that tenant out, or do you buy them out? And that's usually the issues you run into, is how do you free up the entire space? It's almost, I mean, when Mark and I used to work together, we ended up buying a large portfolio, and it was all cross collateralized, right? And you couldn't sell out of bad markets and keep the good markets. And it's a little bit like that. It's that the mall gets cross collateralized through the tenanting.
Oh, it's also difficult. I'm sorry to say, go ahead, Hugh.
No, so as so a few quick case studies on that. One of my brothers worked for a big mall owner, and they were in Atlanta in the process of raising a portion of that mall to build multifamily right now. I've got a good friend who just bought a large mall in the Chicago western suburbs, and they're sort of going to convert part of that into an entertainment orientation, ice rinks, things like that, and while keeping some of the retail component to it. And then I think, and I could be completely wrong about this, but I think that there's an Amazon building in Ohio that was on the site of a former mall, right? That the developer raised the entire site and put an Amazon DC there. So clearly things are happening. It's not the end of retail, it's just shifting. And whether it's a multifamily component, and Mark's got the most diverse portfolio here in terms of what he owns, but whether it's multifamily or industrial, some of these malls that are not the high performing malls are going to be challenged.
It seems like retail will be retail, but it's becoming merged with entertainment. You can buy anything that you would like online, but if you want to go have an experience, that's a whole event unto itself. And I think, your successful retail developers, the successful mall owners are going to dovetail onto that. We have in New Jersey, we all, talk about Xanadu or American Dream as it is now. But I think, those guys do have some vision, and there will be reasons to go there and spend an afternoon, whether you want to go to the water park or the restaurants or whatever. And I think we're going to see more of that, less of, just less small store, small shop retail, unless it's very targeted, very specialized. Because, if you're just going to go buy some brand name you know, Nike socks, I can buy Nike socks and they'll be here in an hour. That's easy enough. So.
Yeah, retail, I mean, again, I'm not the expert on retail, but retail intuitively, when I think about it, well, because it's so well located, typically, right? Because you have to be near rooftops and good access and all that good stuff. It's also why the access, why it makes it great industrial also. But it's always going to get reborn in some way because the location of a lot of retail is just terrific. It's just excellent. It's just by nature, you have to be near population, and location wise, it's going to get reborn as a use.
And a lot of times there are restrictions that are in place that affect the shopping center that might prohibit a rezoning or inhibit your ability to get rezoning put through because it's not a retail use. You might be wanting to use it as a warehouse facility, a distribution facility for Amazon. Might not be able to do that.
So and to just piggyback on that, because we are seeing a lot of rural areas and cities too push back on industrial, and sometimes the word industrial makes it sound like it's smokestacks and pollution and all that stuff, but it's nonetheless we'll get the arguments during planning board meetings of kids having asthma, or it's air quality issues, it's noise. I mean, it's safety. You get a lot of arguments, whether they're correct or not. I mean, I'm sure even when everything switches to electric, we'll still get some arguments against pollution and all that stuff.
That makes sense. And so when we talk about putting up new warehouses, I know that Mark had some ideas about what does a new warehouse look like these days when you're putting them up. Getting creative, are you, or what are you doing?
I think what we're doing now is just a little bit of more. Everything's a little taller. The parking lots are a lot bigger. The structures can withstand a lot more loads, either from the inside or from the outside. And it almost feels like we're building shopping centers. I mean, the ratios, the coverage ratios on the sites keep going down. Couple that with new stormwater regs, et cetera. And, each one of these buildings we build is going to require much more land than it ever did before to get the square footage.
Yeah. That's a good way to put it, a little bit of more. it's like perfect. It's succinct as it gets.
Hey, before we finish up, I can't resist the opportunity to ask each of you to pull out your crystal balls and to do a little thinking for all of us about the future, not only 2021, but beyond. We've obviously seen a lot of growth in the market. I think in the last couple of weeks, I've seen two consultants, one with a big firm, big accounting firm, and the other a brokerage firm, talk about 1 billion square feet of space that's needed in the U.S. in terms of industrial and warehouse, and the accounting folks were a little more, they were talking about 850 million. I mean, are you seeing that kind of demand in your marketplace? And what do you think demand will be and absorption will be in 2021 and beyond?
In New Jersey right now, our absorption is limited by supply. We are sub 1% vacant effectively. So as quick as it can get put up, it seems to be getting leased. And it seems like the limiting factors here are speed to market. I mean, you literally have to be entitled and ready to go before that tenant's going to pick a pen up and sign anything.
Yeah.
So we have to take a lot of speculative risk on the front end.
Yeah, and there is obviously, because of the paradigm shift that's happening, the numbers that Howard you're mentioning don't really talk to the fact that there are all these large retail institutional owners that are, like I said before, they're not going to be sleeping at the wheel, right? So there will be demand for that much space, but is that space coming as brand new warehouse space, or is it come like here in Jersey City where I am, where Newport Mall, Simon Properties owns Newport. There's a Sears in there. There's J.C. Penney in there. Those are going to get potential. I would think they were going to get reborn because there's a huge population here, and it's 3 blocks from the Hudson River and then Manhattan.
So, and for me, what I would say is this: my son has career day in a couple of weeks at school, and he wants to go as Amazon man, right? And so, and that's true. He wants to be Amazon. Yeah, actually, it's Amazon Prime man. He makes a distinction. So, yeah, so that is the fact that he knows that is disturbing. But I think that's sort of the future of the world, and we're going to continue to see more and more deliveries that way. But then also, I think the cold chain in America is a little bit behind. And so I think that we've seen a couple developers now in Chicago and in Miami speccing freezer cooler product, which is a very expensive building and a different type of product. So, we were looking for some freezer cooler space in Savannah recently as well. So what I would say is that I think the cold chain has got a way to go, and I would take a long, hard look at that type of inventory. And I think when Mark mentioned the 1% vacancy rate in his part of New Jersey, just speaks to the ports of entry and the near ports of entry in the U.S. So I would just take a look at those two as real opportunities still, the ports and the cold chain.
And it does seem like there's a flight to quality. I mean, a lot of these users, they can't function, in an old 24-foot clear warehouse building that's, 400 feet deep. They're not going to take that at any price. They'll wait it out, and they'll wait for something, I think, that's functional for them. Yeah.
Well, Mark, it's a simple economics equation, right? So if you're going to pay, even though industrial rents are, let's say, 5% of the whole supply chain cost, you're not going to be able to, if you have a budget already that you've been running at that 5% cost or whatever it is, you can't make that double. So you can't, if your rent is $10, you can't make it $20 overnight. But if you're figuring out how to build an efficient, 54, 56 foot column spacing, 40 foot clear, automated, now you could do, you could do, I don't know, 40 turns or whatever, how many turns a week, or I don't even know what the old numbers used to be per year. The turns from how quickly you turned a warehouse product or the inventory in the warehouse used to be, maybe you turned it less than 10 times a year or something like that. But nowadays, it hardly hits the floor of the warehouse, and it's already out on a truck going somewhere in the same day.
And that kind of speaks to a question that one of our participants has lobbed in here just now. The question was, clear heights of 40 feet plus seem to be the new norm. What are trends in column grid spacing? 40 by 40 was pretty typical, but how big a grid spacing do you see with the new automation coming to warehouses?
Yeah, Mark, I'll take this into you real quick. We're seeing really 54 and 56 foot column spacing, and really it's to sort of get a little bit nitty gritty into the detail here. What ends up happening is you get you start losing efficiencies once in steel cost and steel amounts that you have to put into a building once you. And this is all per, the structural codes and all that, the building codes. But once you start going to 60 or 70 or 80 feet column spacing, your girders and joists have to be much larger. So it's kind of like a Pareto's law thing, right? Like what is the Pareto optimum? So you're maximizing your spacing of your bays to forklift types, then what that forklift type, how high it can build, or pick, and then at the same time your steel costs and things like that. So 54 and 56 feet is sort of right now it's what it is.
All right, and picking up on that, there's another question from our participants. How does automation weigh in these warehouses? what is the cost of automation relative to the cost of the bricks and mortar?
It's a lot.
Man, you're doing one, I'm doing one, and they're about the same. So
Meaning the cost of the building is sometimes the same as the cost of the automation itself.
Yeah. And I've got another question to lob to Hugh. Question from our participants regarding freezer, cooler space, or cold space. Are you seeing this primarily for grocery stores, or does this have anything to do with the vaccine storage? So in other words, we've got some of it now. We have too much of it once the vaccine.
No, I don't think, first of all, in Chicago, the vaccine isn't even really been distributed. So I don't know where it is, but yeah, right. So
Tennessee.
yeah, it's in Tennessee. Exactly. So, you know, I would say that the majority of the cold storage users that we've talked to in the last year are all strictly on the supply side, on the, you know, protein, pizza, you know, that kind of protein, chicken and beef, that kind of product. So very little of it to do with vaccines.
All right.
Yeah.
And I guess I would be remiss if I didn't throw this out here, because it is sort of the unicorn of industrial real estate warehousing markets these days. Tell me about your vertical warehouse, the mythical, magical vertical warehouse for us here in the Flatlands. Are you all seeing them? Are you projecting them to be in the markets outside of the urban cities like New York or Tokyo or Singapore?
Yeah, so we're seeing them in New York City, and I know there are a few people from New York City on this call, so I want to be careful of how I word this, but you know, some part of it is also well, this arbitrage that I mentioned with the retail rents versus industrial rents. So there's room, and then there's also the other part that Mark was mentioning about this flight to quality. So institutional investors, once large institutions came into the industrial world, obviously they drove prices up, but also banking and insurance companies want the tenants to be in Class A, reliable buildings that, you know, have good fire code compliance and whatever, all the safety items there, right? Bells and whistles, and the I mean, you're seeing some Amazon buildings, multi-story, 3 point whatever million square feet, going up in the suburbs. And at least when I'm looking at it intuitively, it makes sense for them to do it because they have the volume that they know they have the volume to put through those buildings, right? So it goes back to that sort of accounting norm of reducing your unit cost, right? So you could do lots of turns, you know, you have the clientele, so you could make it work. So New York City makes sense, right? Even though your costs are high, the arbitrage between retail and industrial rents are pretty far apart. So you could have a lot of room for growth there, and you have a large population, so you could do tons of turns and tons of consumption. So and it's right there. It's close, right? So it's you're right on top of everything. How does it translate to others and other locations? I mean, New Jersey, it still doesn't work in terms of cost-wise. It's getting there, but it's not there yet. But a lot of the multi-story these days kind of goes a lot to what Mark was mentioning too, is parking. A lot of the multi-story gets parked because you need vans and everything else.
Hugh, are you seeing anything in your markets?
Yeah, absolutely not. I mean, I would say this, that there are probably 5 companies in America who could be willing to pay for multi-story space based on all the density things that Beau just spoke about. But yeah, certainly not in Chicago. The density is just not there. And then if you go out west, you know, people just keep going east because of availability of land. But I mean, I do see it. And you've got to be in some specialized, highly concentrated, very dense markets A Chicago developer is spec in a multi-story building in New York now. So I mean, it's geographically driven at the moment.
Right. And I would add one thing, being a developer, Katie, is there's also a little bit of a ego thing where, hey, we want to be the first ones. We want to be like, we want to say we're the first ones that did it. So there's some of that also rushing towards it. Luckily in New York City that works. But what was interesting is how quickly the pricing converged, where land was initially, let's say, going for $100 a square foot, an FAR in New York City. Now it's you 200 plus. It's and everyone and their mother is they want to convert their land to industrial.
Unbelievable. Mark?
And now it's just been, I think, just what kind of agreeing with what Beau just said. And I think we will see them. I mean, we're going to see more of them in certain really densely populated. I mean, Manhattan makes sense. Some of the boroughs make sense. The other thing you have to put in there is, transportation costs. They factor into the whole model. And, running a bunch of trucks over the GW Bridge is not efficient and it's very expensive. So all of that kind of factors in. If you're in a city that has, from the outskirts of town to downtown is 10 minutes, I don't think you're going to see one anytime soon.
Yeah.
And can they be purposed like any other warehouse to be shared? Are you really allocating this vertical warehouse to one user?
It's, if you design it right, it should be able to be subdividable. But as you're alluding to it, as you're going vertical, you have to think about, how do you get people in an emergency down from, from the second floor or third floor, whatever, how many floors you have. So then you start building an office building at that point, right? That has loading and
with ramps and shafts, and your
Right.
site becomes less efficient. Just
right. And given that America is or the United States is a relatively young country. I know been around a few hundred years, but it's roads are larger, trucks are larger. And everyone always talks about Japan and multi-story there. A lot of these trucks are very heavy, and to support it, going back to the column spacing and all that. Once you start going multi-story, and you have seismic codes and all those things, and you have these WB 67s or whatever the size they are, it becomes kind of expensive and an engineering exercise.
Also presents some interesting, if you have multi-tenants in a multi-story warehouse building, also presents arguably some management issues that you don't have otherwise, because you have to make sure that all your folks play well in the sandbox together.
Yeah, well, I mean, the Northeast, the biggest thing we were also looking at, whether it would be Chicago too, is snow removal. Right, like you already maxed out on loads, and so you don't want to create extra loads on these truck courts in the air. And so now you really have to figure out, you can't just plow the snow to the edge of the truck court. Like you have to manage your snow. So like little things like that, it's things that you have to think about.
So you'd have truck courts on every level or every so many levels?
Ideally.
Okay.
Ideally, you'd like to, but you won't always get that opportunity.
And that's the difference between these buildings and the Amazon multi-stories in the suburbs. I mean, the loading on it is all at the first floor on those multi-stories.
That's what I was thinking of. We have another question that's come in from one of the participants. Generally, what is the average number of people working in the new warehouses per square foot? I suppose this is an automation versus humans question. You guys have any thoughts?
Let's see. I mean, what we're seeing, it really depends what kind of distribution facility is. I mean, if you're doing a what's it called, a fulfillment center, like a 1 million square foot fulfillment center, like the Amazons. I mean, they'll have 3,000 employees. I mean, during during the holiday season, and obviously they'll flex even to more. And then some of the other ones will, could go down to, as for 1 million square feet, could be 300 or 500 employees. Now, and also this is shift employees. So you kind of divide it over 24 hours, with the biggest shift being in the, meaning the biggest amount of employees being in the first shift, like 7 a.m. to 3 p.m. or something like that.
Sure, sure. And the zoning obviously has to be taken into consideration. To make sure that
We get the question every time, and we say it's 24/7, and we have no idea who it is.
24/7, and and all of the parking that we built doesn't mean that many people are going to actually work there. That's to cover shift changes and seasonal capacity.
Right.
I say that every time.
And do they buy it every time?
No.
Yeah.
No, but it's that's actually part of the design that these users want. They don't want to have a guy coming in, spending a half hour trying to get a place to park before he goes to work. I mean, that factors into decision making as well.
Yeah.
Absolutely. I think this has been an amazing presentation. It's been great to hear from all of you. We have a few minutes left, and I've got maybe a couple of questions that came through that I didn't ask. Let me just see if I can push them forward. Are any of your clients interested in an airport interface? And if so, what are your clients looking for?
I don't know, Mark, you want to take this? You did a lot of airports. I have some of my opinions, but
we are actually developing at Lehigh Valley Airport in Lehigh, which is, we keep talking about Amazon, but that it is what they do. We are next to and actually sold the land to FedEx for their hub, and that is becoming a little bit of an air freight intermodal spot. Amazon is now the largest cargo carrier into that airport. We haven't seen any any ancillary demand yet, but we do anticipate some.
yeah. Well, just in Mark, we, in a former life, we did a lot of stuff at JFK Airport. And one of the things I've learned is, over time, JFK Airport, for those of you who are not familiar with JFK Airport, it's in New York City. It's in Queens. A lot of the demand for that back in the day was, okay, well, everything kind of came in to JFK Airport. And there used to be more dedicated cargo carriers. And then, of course, as airlines kind of wisened up and they realized that you could send the package from London to Dulles to JFK to O'Hare, wherever, because you could put it on a passenger flight, right? So this is why also a lot of us have to pay for luggage, because airlines realized they could make a lot of money by carrying freight. So a lot of the times when you are flying on, whether it's United, American, whatever it is, it's also carrying a bunch of cargo at the same time. So yeah, these airlines, the passenger flights are getting into that business, actually.
But the just regular shipping channels have gotten so much more efficient.
Yeah.
You're seeing less air cargo. I mean, air cargo is generally pretty flat. It's not going up as a method of shipping right now.
Hugh, are you sitting? Hugh, you're on mute. I know he's got something.
They're ready. Can you hear me?
Yeah.
Well, there's probably just meant I had nothing to say. I probably should shut up. But I just want to point out that it took 59 minutes, and Mark was the first person to mention intermodal. From a distribution perspective, and so O'Hare, living in Chicago, we have the O'Hare submarket, and I think I'm frozen.
No, you're good.
No, you're good.
Hear you.
Yeah. So in Chicago, we have the O'Hare submarket, which just gets bigger and bigger every year. I mean, in terms of what developers and investors are willing to call O'Hare. But I would say that, and we also have the largest inland port in the U.S., which is Centerpoint Intermodal Yard. So intermodal is very much a thing, and I think what Beau said about airlines shipping cargo makes a lot of sense, but it's not a driver per se.
All right. How about thoughts on just-in-time manufacturing and increase in inventory requirements? That will accelerate in 2021?
And that's a little bit of a COVID hangover, and I think it's here to stay. I mean, a couple of the things we were working on, pre-pandemic, and then they ultimately got done during the pandemic, those requirements expanded just so that inventory could be onshored and at hand. So I think that will be here for a bit, and then we'll see how it goes.
Right. Yeah, because someone has to pay for carrying that inventory. So, you don't make money unless you've actually transacted with it. So nobody really wants to hold additional inventory.
No, but I'm sure there's a couple new Kimberly-Clark warehouses out there right now.
I was just going to say, on the other hand, yeah, you don't want to be short some of the necessities in life.
Right.
But I think it'll be interesting to see whether some of the retail tenants shrink the sizes of their spaces because they're not going to carry material and inventory within the stores, and the demand will then be created for warehouses and availability nearby.
Yeah. I mean, you don't want to miss sales, but the whole inventory thing it's all buffer sizing, right? So you don't want to miss sales. So you size your buffer accordingly, and like Mark said, COVID messed everything up in that perspective. So now people have to figure out what that right buffer size is, so that they don't lose money, but they could make the sales. Yeah.
I didn't realize I had a buffer in my basement.
Yeah, you might. You probably have a buffer in your pantry and your basement.
Right.
Absolutely.
And in 2 years, everyone will look at the dates on this stuff and throw it all away. But
Right.
that's just the way it's going to happen.
The last question we have coming from the participants on the webinar, and we've sort of answered it, but I think I'm just going to put it more directly. Given the amount of the square footage under construction and what's being proposed, are we looking at a warehouse bubble? Are we looking at cold storage bubble? Are we looking at what?
Yeah, I don't think so. I don't think we're looking at a bubble. I mean, asset pricing is pretty high, but I just go back to the what I keep harping on is this whole arbitrage between retail and industrial rents, and for now, I think for now we're still the demand is still outpacing supply.
And I would just say the mentality, there used to be a time when a developer would take down 400 acres and have have some staged development plan. But now, unless developers have changed the way they're thinking, every developer we talk to, they want a site that they can put into play right away and go vertical right away. And it's not necessarily having a huge inventory of land. So I think developers have become a little more rational in the way they approach speculative projects.
Yeah.
I agree. I think we are much more in equilibrium as far as supply and demand's going. We all have data now. We never used to have it. When I started in this business, you looked out there and you're like, well, it looks like a good spot. So you just do something. I mean, you didn't have a whole lot of analytics behind it. I think all that's changed. And I think it can pivot very quickly. We can turn the spigot off just as quick as we can turn it on.
I guess it depends on the institutional investor market too, and how much, I think as we were talking about, drunken sailor money is out there right now, and what that does to the market in the long haul. I mean, that's the darling right now, right? That's what people are looking to.
Well, most of these institutional investors can afford to hold in downturns, right? Like that's in 2009, we didn't really see that big shift of like it was in 93, where a lot of people had to give the keys back. They're just, the balance sheets are just very strong.
Absolutely.
Yeah, you see relatively low leverage on everything. And the non-recourse 99% isn't happening.
Learn something from the last go around.
Yeah, no, that's exactly right.
That's right. Hugh, do you see anything on your end from the industrial side, institutional investors? Anything going down in your markets?
I would say that if you have some decent product, try and sell it. That's my thought.
It's terrific.
Yeah.
Well, this is going to conclude our webinar. I'm really grateful for all of my panelists and my partner for making this so interesting and amazing. And I would like to let everyone know that we will be sending out an email after this concludes the next few days, and it's going to have access to the recording of the webinar in case there's something you want to revisit. So again, thank you all very much for your participation, and until we can all get together again in some safe way or form in 2021. Take care, everybody.
Great.
Thank you, Katie. Thank you, everyone.
Thank you.